Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, this week marks the one-year anniversary since the SEC's cyber incident reporting rules went into effect, now requiring public traded companies to disclose major cybersecurity incidents. But new research from BreachRx suggests that many companies are still struggling with how and when to report these incidents, and even more importantly, how to provide enough detail to avoid SEC enforcement actions. To break it all down, we're joined now by Andy Lunsford. He is the founder and CEO of BreachRx. Good morning, Andy.
Morning, Trinity.
Now, Andy, this week marks the one-year anniversary, as I said in the lead-in, of the SEC's cyber incident reporting rules. From your research, what key trends or patterns have you observed in how companies have complied with these regulations so far?
I think one of the biggest surprises that we saw was that not enough people are actually disclosing. I think that the volume of incidents reported was much lower than most were expecting, given the volume of attacks, the number of incidents companies face every year. I think there's also a lot of revelation in the research on the fact that there's some confusion as to what type of incident to report, if it's material or not, and what type of filing to submit. And that led the SEC to actually put out some additional guidance on the difference between a 105 material incident versus an 801 voluntary reporting of an incident. Those are some of the trends.
And you've noted confusion and caution among companies about when to file under the SEC's reporting rules. So what are the main reasons for this uncertainty, and how can businesses better navigate these requirements?
I think the transition from trying not to report too much to provide that was going to create additional liability for companies. I think, as coming at from a legal perspective, I'm 20 years a security lawyer, and there's a fear that you're going to create more liability by reporting too much about an incident. But the reality is this new rule and a lot of the 200 plus local rules we have worldwide, they really want more transparency. The regulators want to say, hey, what are the incidents you're facing? Can you give us details about how you're responding to them? Are you dealing with them responsibly? And from their perspective, they feel like that's very material information for investors to know in making their investment decisions.
And the data that you've analyzed suggests a general failure to provide enough information in SEC filings. What specific gaps are you seeing in these reports, and how could disclosure better help protect companies from future enforcement actions?
Yeah, most of the reports that we saw, most of the filings have very boilerplate language, so it doesn't really give the investor a lot of information about the incident and what's actually happening. It's pretty high level. And so I think we're seeing that with some of the enforcement actions that are about the rules, new rules going into effect last year. The SEC is saying, hey, we need more detail than what you're providing, not just the boilerplate language. And so I think if companies want to avoid enforcement actions, they really need to be revealing more in these incident filings than what has been shown over the last year.
Now, in your opinion, how effective have the SEC rules been in informing investors about the company's cyber incident response and risk management practices?
I would say that early results are pretty minimal. I don't think it's really achieved what the SEC was hoping it would. And I think you'll see either more guidance coming from the SEC or enforcement actions that are going to actually push companies to provide the level of transparency that they're looking for here in the coming years.
Now, with the new administration taking place in January, looking ahead to 2025, talk to me about how you see the landscape in cybersecurity evolving over the near term, especially in light of the recent SEC enforcement actions and the upcoming regulatory changes.
Yeah, I think, unlike some areas that the SEC is regulating, like cryptocurrency, where it's a little more clear there's going to be a really market change, I don't think we've got that level of information with the new administration yet as to what they're going to do from a cybersecurity perspective. It's actually a pretty bipartisan issue to want strong cybersecurity in place. We're seeing the Texas AG as an example, comes from the Republican side of the House, is really aggressive when it comes to enforcing privacy and cybersecurity-oriented rules. And so it's not clear what the new administration will do on that front. Even if they don't bring as many enforcement actions against companies, there is a real desire from the newly nominated SEC chair for personal liability and really holding people personally responsible. So I think we'll see both CISOs and even CEOs on the hot seat when it comes to some of these issues around cybersecurity.
Now, Andy, as the founder of BreachRx, you assist companies in preparing for and responding to cyber incidents. What advice would you give businesses today to improve their compliance with SEC rules and better manage their cybersecurity risks going into the new year?
Yeah, incidents are an inevitable situation for any company. And so it's really about being proactively prepared with a systematic approach. And so we've built technology that really enables companies to deal with incidents in an automated way, a repeatable way, so that when the FTC or any regulator comes knocking, you can really show your work and say, hey, we take this seriously. We know incidents are going to happen. We prepared a very sophisticated system to deal with them so that we're dealing with them in a really quick manner and making sure we're protecting our consumer information and really ultimately protecting the stakeholders and investors at the end of the day as well.
A lot of important information right there. Thank you again, Andy Lunsford. He is the founder and CEO of BreachRx.